We focus on a small subset of my favorite dividend ETFs on this channel, but not today. Oh no. We will be comparing 20 ETFs in this one to find the one true king. My favorites will be included, along with many that this community has brought to my attention over the years. And speaking of the community, let me know if you have a dividend ETF that you would like to see included moving forward. This series only drops 2 videos per year, so we'll get extra nerdy with it and leave no pocket protector behind. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please eliminate the like button, subscribe if you haven't already, and drop me a comment below with anything that comes to mind. As always, the channel has no sponsors, but I'll give my typical shout out of the things I believe in, and that's Snowball Analytics for portfolio tracking, and Seeking Alpha Premium for all things investing. If you're interested in saving some money, check out my comment pinned below. And one extra tidbit, do not use my Seeking Alpha link. Please do not support the channel yet. Starting on June 11th, Seeking Alpha is going to have a nice sale that'll save you $60 on a full year of premium, and it'll help you support the channel. Delayed gratification, just like investing. You know what time it is. Let's grow. Dividend ETFs. Dividend investing provides a path for building stable wealth over the long haul. Dividend stocks shine brighter than their growth counterparts in a down market, but they also limit the growth potential when things are booming. I think a balanced portfolio should include both value and growth stocks, or ETFs. My core ETF mix has comfortably outperformed VU and VT over the past 13 years, and that includes performing well in both up and down markets. I've done this with an equal mix of growth and value. And I'm well aware that the growth side of things has done the heavy lifting over the past decade, but the reversion to the mean will be unkind to an imbalanced portfolio. I say this to get ahead of the growth-only comments that hate on value and dividends. You know who you are. We'll be focusing exclusively on dividend ETFs for the remainder of this video. There are a lot of key metrics to consider in financial data, but for dividend ETFs, I focus on the trifecta of dividend yield, got to get that money now, dividend growth rate, we got to smash inflation and our yearly raises at our job, and of course, like any type of investing, total returns. It doesn't matter how big that yield is if we're falling into a yield trap and we're losing money overall. A dividend ETF that smashes all 3 of these metrics is the real deal. But the emphasis that we put on each of the 3 will vary from investor to investor. If you're retired and need the cash flow now to live life and pay the bills, you'll focus primarily on dividend yield. And every investor at all stages should care about total return, at least somewhat. You could have something yielding 10% while having a negative total return over the years. This is known as a yield trap. I am a dividend growth guy because I'm a compound math nerd. Let me show you a quick example of why I cringe every time someone tells me they prefer a guaranteed 5% high yield savings account or money market to a measly 3.5% yield from something like SCHD. If you've been around the channel for a while, you'll recognize this one. This is our retire on SCHD spreadsheet that I did a save as and slightly modified. And I'll catch everyone up real quick. We won't go over everything like I do in painful detail in the other videos, but this couple retired at the end of 2012, so the beginning of 2013, and they had $500,000 that they plopped into SCHD. And this is split adjusted. It had a 3-for-1 split. It bought 52,929 shares. That's what 500,000 got you at the beginning of 2013. And just for context, dividends are not reinvested. We are not grabbing more shares of SCHD, and we are not putting more money in the HSA. The 500,000 initial investment sat in both, and all dividends that it kicked out were used to live life, spend, and have a good time. And the last thing to set the table, as many of you know, from 2013 up until in here, you were not getting 5%. You were well under 1% for most of this. So this is positively optimistic just to make a point. I'm pretending like we got the 5% all along, which we didn't. But even grossly exaggerating what you could have done with high yield savings, money market, or short-term treasuries, your 500,000 gets you 25,000 a year. 5%, that's not bad. Spits it out every year, you spend this, have fun, and you still have the 500K in your bank. Now, if you would have dumped it in SCHD, you only receive 16,000 at first. Oh, but then 18,000, 20, 22. Okay. Few years in, we're already above the HSA. And as you can see, the power of compound is genuinely unbelievable after a while. So in full year number 12, $53,000 to $25,000. You are over double, and this will very quickly, again with the power of compound, be over triple, over quadruple, and on and on. But that's not all. Ladies and gentlemen, with this scenario and the cool 25K a year, you still have $500,000 and $3. I couldn't bear to make a fractional share, by the way, that's why it's the weird number. With the SCHD, not only are you doubling your cash flow that you're spending, you're not reinvesting this, these shares never changed. So again, apples to apples, you also are sitting on $1.44 million instead of $500,000. This appreciated over $900,000 without reinvesting a penny. When you hear people talk about the power of yield plus growth, this is what they mean. It's hard to believe until you see it on paper. And again, this is a less extreme example than most. So be careful with that yield, pay those bills. But if you have the portfolio value, really focus on that growth as well. Let's agree that all three key metrics matter and get on with this crown thing. The best dividend ETFs. I thought of a fun way to crown a champion every 6 months when we make these videos as I was scripting yesterday. And full disclosure, I have not created this spreadsheet yet, so I don't know who's gonna take the W, and I'm creating more work for myself. But I'll do it for science. I stole this idea from my Growth ETF series where I crowned a champion based on the total returns over the last 10 and 20 years. With Growth ETFs, it's all about the total returns over the long haul. I think dividend investors focus even more on metrics that support long-term performance, such as consecutive years of dividend growth. We're going to rank each of these ETFs on the following scoring system: 10-year total return, 10-year dividend growth rate, and a trailing 12-month dividend yield. The ETF with the best average rank of those three scores will take the crown. And again, this is creating more work for me. I probably shouldn't do it, but I can't resist. Let's jump out to my spreadsheets now, and then we'll touch Seeking Alpha as well to rack them and stack them. We'll start out here on my ETF Compare spreadsheet. And just a side note, this is out there for free for anyone to download and mess around with. And so within the spreadsheet, I'm on the dividend ETFs, and you can see it's getting a bit overwhelming. We will not be reading all this, I promise. We'll get into the good stuff here. And I made an executive decision as I was scripting this video. JEPQ, JEPE, and Devo are all actively managed. I think I'm going to make a separate semi-annual series for actively managed derivative and covered call ETFs. So everything from SPYD and down, I think, is passively managed. I believe that's true. Most of them follow a direct index, and that's what you can see here, the index or methodology. I kind of free type in here. But many of these have been suggested by the community, and you can see what they're based on. And then I always throw in VOO as well. Little spoiler alert, the reason these are in a weird order is because they are sorted by yield, which you can't see yet, but we'll get there. But VOO, I put on the growth tab, I put on the dividend tab. It's just always a good context to see how it's doing versus the quote unquote market. And let's begin by sorting by assets under management. And these sometimes go in a goofy order because of how numbers work. Bear with me here. You can see it did it with JEPQ. But VOO has the most under management. We'll ignore that one because it is the market. So of all these dividend/value ETFs, VTV from Vanguard, and that is a value index, has $184 billion under asset. Now of the true true dividend ETFs, and it's a dividend grower, low yield, VIG has over 100 billion. Impressive. And then there's a lot of VYM fans out there. It's at 70. SCHD, my favorite dividend ETF, is at 67. And green just means I own it, by the way. And JEPI's nearly 40 billion. And then you drop down DGRO. I'm really happy to see this, actually. I've been following this one for a long time, and it took a while to get momentum, but it's over 30 billion, and it deserves it. And then Cow is getting up there. But again, I won't read them all off. You can see there's quite a few from 10 to 20 billion. And then you have the smaller up-and-comers that, you know, are pretty popular in a lot of your suggestions, frankly, and they're doing really well, and we'll see that here in a minute, anywhere from 1 to 7 billion. And now from a holdings perspective, it's not necessarily the more the merrier. You can see our international dividend yielder, VYMI, has a lot of holdings. And then VYM has more than the S&P 500. I should remember that, but it always surprises me a little. And I knew DGRO had over 400. And you can go down the list. You have like ones with lots of holdings up here, well over 300. And then you get a little more concentrated as you go down. The two I hold have right around 100. But what's also important here is the top 10 holdings. So some funds have a ton of holdings, but they're top heavy. You know, 70% will be the top 10, even though there's 500 of them and things like that. So this is where you want to be a little careful. You can see FDL has 100 holdings, but 56% are in the top 10. So not as much variety. And Devo only has 32 holdings. So this isn't as alarming statistically, like when you break down the math, but still about half of them are one. And then HDV up there at 48%. My two like to be a little concentrated here at 41 to 46%. The market itself, and then everything else is pretty well diversified down here from a top 10 holdings perspective. Okay, and now it's time for the good stuff. Let's get all the basics out of here. I'm going to sort by expense ratio. So our lowest expense ratio of all of our options here is VTV. Interesting. Highest assets under management and the lowest expense ratio. But you can see VIG, which pretty recently dropped by 1 basis point. Div B is right there at 5. And SCHD and VYM, really, we have a pretty close to a tie here with all of these guys, DGRO and up, at 8 basis points and below. And then you start to sneak up a little, but I would say if you're below 0.2%, that's not bad. In my opinion, when you get around 0.3 and higher, just the compound fees do start to add up. And total returns, which we'll jump into, do include these. So it's not impossible. But remember, expense ratio is the #1 isolated predictor of future total returns. That's a fact. And that's been that way for a long time within each category, within, you know, growth, value, dividends, etc. So it doesn't always mean it's going to be the highest total return, but it's your #1 future factor in a vacuum. So when you get up to 0.35, and again, actively managed 0.35 is great. Passively managed, like Noble, SDY, and things like that, not great. And then again, these are fairly passively managed, not Devo, but ouch a little bit. And then Devo, I did break my hard golden rule. You guys made me, you pressured me because you love Devo so much. Usually I don't consider things that are above 50 basis points, but you guys made me fold. I'm becoming a softie. As you can see, I have 5,000 holdings because you guys are wearing me down. I'm playing, but let's go ahead and look at dividend yield here. Now you can see that these actively managed ones go 1, 2, 3, and that makes sense. They're using derivatives to create some yield. But still, you know, count it. But from the core buy and holds, you have the SPYD, FDL, International jumps in there, and then SCHD is right at a clean 4 at the time of this recording. And really anything above 3, I consider solid. I know people think it's a joke, but I think the growth rate combined with 3+% is really good. And as you saw in that spreadsheet earlier, I'm sure you agree if you really think about it for the long haul. But you have like HDV and DVY, and SPHD basically tied here. FDVV, a really hot one that people love, over 3, so that's really good. VYM's usually around 3, and there it is. Div B, little hybrid strategy with buybacks and dividends. Pretty solid fund, and we'll get more into that. 2.7%. And really, yeah, I mean, everything's pretty solid. Everything's at least over 2, except for cows and VIG, and that's always been an appreciation fund. But the growth is good, and it's solid, but, you know, it's down here. And of course, they're all crushing the market in dividend yield. They better, otherwise they couldn't make this video. It's at 1.2 11.3, just for context. That's what the overall market is doing in the United States. We have some solid performers here. Now we get into what I consider the fun stuff. And by the way, NA is just the fund isn't old enough to have data for that. Normally I wouldn't include something like JFT in here, it's too new, but I hold it, so I have to. It's all about the accountability. You, the community, get to hold my feet to the fire. I can't get away with hiding behind my holdings. Wow, Div B, 23%. And cows, I knew, that's really impressive. Of the ones I follow consistently, SCHD takes the 3-year dividend crown at 11.3%. FTVV, wow, that's really good. 9.7, okay, because we'll get into the total returns. That's staggering. That's very impressive on the 1-2 punch there. And then you see DGRO, and again, I'll try not to read everything. You guys can look. VU actually stepped its game up a little on the 3-year growth. VIG is usually higher in this. Interesting. Its friend DGRO is ahead of it right now in the 3-year. Now on the 5-year dividend CAGR, wow, cows and Div B, not a fluke. And SCHD, definitely not a fluke, but that's something. 15.64 and 15.12. SCHD is at 11.44, and its 10 years actually in the 11s too. Seeking Alpha doesn't have a 10-year dividend growth, but I want as much data as possible, so I had to manually create the scorecard. I just did that, by the way. And so we have official winners, and only ETFs that are 10 years old could be scored because I require longevity. We'll get into that after that. I don't want to dive too deep. But VIG, a very impressive 11%. Noble, now this is interesting because you only have what is it? Dividend Aristocrats, I believe. And so these ones have grown at least 25 years. And they still have almost a 7% growth rate over 5 years. That's impressive. That's very impressive. FDL, and I won't go down them all, but you can see that FDVV, a fan favorite here on this channel in the comments, is at 4.44. Again, I'm not gonna smite it just because it has one bad figure, but you'd like to see a little higher than that. Now on the performance, we're gonna skip year to date. I'll do a quick sort so you guys can see, but this is such a small snapshot in time. Oh, and by the way, you can't assess things like JEPQ. Year-to-date performance does not include dividends. And same with 1-year performance. Seeking Alpha starts the total return on 3 years. So anything with a really high yield will struggle in general. Although Devo still did pretty well. Its yield's not nearly as high though. But that's just an FYI out there. And I'll quickly sort by 1 year. You guys can take a look if you want. Wow, International's actually beaten the market in the last year just on performance too. That doesn't even include the dividends. And again, JEPQ is always going to be down here because 11% yield is not included in this. So you could add basically 11% to this. But you have all these guys here. SCHD has been really bad in the last year. In fact, it's been even worse in the last 3 years by comparison. You can see it's 16% total return. So the market, VU, has been at 57, and we know it's been a growth market. We don't expect things to beat VU, which is about half growth and half value over the years. And VU is on the bottom of the growth update, which makes perfect sense, right? But JEPQ is right there. And then FDVV. Okay, you guys, you're cooking. You're cooking. I'm not going to lie. It's up there at 44%. International's been very solid over the last 3 years on the dividend one. VIG, a very impressive 42. You know, I'm not going to read them all, but you can see a lot of them are performing. 30% or more from JEPI up has obliterated these guys down here. That's a big delta. And even Noble, kind of a stalwart, steady Eddie, has outperformed SCHD. So things haven't been looking good. But when we go to 5 years, they shift a little bit, things even out. And again, you have some NAs, don't have the 5 years of history. Cows, number 1 at 135. FDVV, ahead of the market. Goodness gracious, okay. And then Div B's been really good. International, solid showing there. You can see my favorites. Maybe I'm doing it wrong. VYM actually passed DGRO and VIG. I don't think I've ever seen that on a 5-year. Congrats to all you VYM holders out there. And then SCHD, bringing it up the caboose on the ones I follow at 83%. We'll get into some 10 years, but wow. I say it often, but in its first 11 years, it out-returned VU on total returns comfortably, like 316% to 200 and something percent. But it's been dragged down lately, and Noble kind of coming down in there. So look at the 10-year. You're going to get some more NAs. So unfortunately, these are not available for the crown yet. You got to give me at least 10. But the market, as we would expect, it's been a growth decade, wins. DGRO and VIG. Okay, they're always battling, and here they are at 190. You have DLN sneaking in between. And then SCHD is at 169. Now that is a nice return. FDL, VTV, VYM pretty solid at 148, and Noble all above 140. So Noble, you know, trucking along pretty good. Really don't like the 35 basis points. For this pretty simple setup, that's a little bit ridiculous in my opinion. Kind of frustrating. It does drag this down. You know, over 10 years, that compounds. It should be like up here. SDY, DVY, HDV, and SPHD bringing it up the caboose. Ooh, pretty deep in the caboose. What we're going to do now is we'll jump out to Seeking Alpha. Oh, this is going to be difficult. I'm going to have to decide which ones to show. We'll do a 1, 3, 5, 10 year look back. So I'm gonna have to get creative here. I can only show so many at a time. I'll try to get all of them some love as we go along. Okay, I'm out on Seeking Alpha. I'm on the charting tab, and I had to make things a little uglier than normal here because I wanted to get more tickers. So we have to scroll a little. It's worth it though. What I did was I sorted by the 5-year returns, and I picked up what I deemed to be the stiffest competition for my 4 favorite ETFs. Now we're on total return, and we have SCHD, DGRO, VIG, and VYM. As always, that's based on their long-term performance. FDVV earned a spot for the second video in a row. VYMI with a little international flavor, and goodness gracious. And then we'll have to scroll a little each time, but DivB with that 2.7% yield, 15% 5-year growth rate, and solid performance, I had to include it. And we'll get more ETFs in the mix as I add years, because some of these will fall off. They don't have 10 years. We'll get there. So you can see year to date, SCHD is the worst. I alluded to that. In my opinion, a good buying discount, but hey, who am I? DGRO and VIG are at about 1%. VYM slightly the best of my 4. FDVV pretty solid in between my laggard here, SCHD, and just behind the other guys. VYM is at a staggering 18%. Wow, hello. And DivB comes in first place of the US ones here at 2.53%. Not too shabby. Now, when we zoom it out a full year, SCHD is still struggling at 5%. DGRO is slightly trailing its friend VIG by a couple percent at 8.9 and 10.5 respectively. VYM still number 1. Okay, is this backwards day? At 11%. FDVV is always solid since inception. It's up 10%, again falling right in the mix. International still up about at 17. It's the king of the last year. And DivB, ooh, I said that before I saw this one, but it did hold on to its crown so far. DivB comes in second place, so not a bad year. Zooming out 3 years, and I think this is where SCHD is the most pathetic. And as you can see, that's not just my opinion. 10% total return compared to the growth-oriented DGRO's 28 and VIG's 34. And even the less growth-oriented VYM is crushing it at 26%. So it does fall behind these other two a little bit, but solid for a higher yielder. FDVV just crushing it at 37%. Still behind international. I did not know this, actually. I do this live with you. At 39%, that's really impressive. And DivB, I thought it could have taken the crown, but it did not at 31. Still better than my options besides VIG. And zooming out to 5 years, and now this is going to be the last timetable for these 3 guys here, just as an FYI. So for our mini championship, we have SCHD catching up a little bit at 76% total returns to DGRO's impressive 86. It takes the crown between my 4, and VYM is second at 86 as well, and VIG is just behind at 84. Now FDVV, oh my, okay, I hear ya. I get the comments. 119%, probably the champion. VYMI is at 99%, so international's ahead of these guys over the last 5 years. Okay, I would not have had that on my bingo card, honestly. Oh, I was so curious of how this one would do. DivB, I almost like the suspense of the ugly ugly off the screen vibe here. 100% returns for Div B. So all three of these, and there's a reason I cherry pick added the best, outperformed my favorites over a decade plus pretty comfortably in the last 5 years. So good job to the new guys. And someday they'll have 10 plus years and they could become one of these positions. All right, now we've zoomed it out 10 years and I've added the best options of the new competition. And you'll notice I did change the order to descending for my 4 and the 3 contenders. I will fully disclose, I did drop VTV, the value index, from this. It was technically slightly ahead of Noble, but I thought Noble was more of a dividend ETF that you guys may be interested in. And you can see that VIG takes the crown over DGRO. You hear me in all my videos. These guys are just always deadlocked. It's crazy. But it did get the win at 192 to 191. SCHD is up 170% over the last 10 years, and VYM at a solid 150%. Now, of the new competition, DLN, Wisdom Tree, I believe, right, is ahead of SCHD by a solid 10%, and almost 10% within DRG. So really, it slots in right here the last 10 years. That's impressive, you know? Give it kudos there. FDL comes in at 156, so it did outperform VYM, but it fell a decent amount short of SCHD for the 10-year return. And then we have Noble, which I know a lot of people like the Aristocrats, 143. We're out to the championship tab where we will crown a king for each one of these videos based on the 3 key metrics that we established. In this list right here, we see every ETF that is eligible for the crown. And again, the only quote unquote requirement is that you must have existed for at least 10 years. I'm going to open this up category by category to keep all you nerds on the edge of your seat. First, we have total return. And let's go ahead and sort. Looks like DGRO has taken the crown thus far, and VIG is not far behind. And we did see this was flipped. A lot of times the 10-year data from when I pulled it is slightly different than the 10-year that we just looked at live in Seeking Alpha. So there's no funny business here. It's just at the time, DGRO was a little bit higher a couple days before we just saw on my screen share. DLN coming in 3rd, SCHD down in 4th, and you can see so on and so forth. But let's open it up to one more criteria. We're adding in the dividend growth, and we can see that SCHD took a 1 rank on this, still sitting on that 4 as well. Noble, a very shocking 10% 10-year dividend CAGR. This wasn't in Seeking Alpha in the feed that we pulled. I take the longest growth history possible because that's the most accurate over the years. We want to buy, hold, chill, and live life. DGRO at a solid 9%, and this is technically a 9-year CAGR. We don't have the full 10-year CAGR look back yet, but it does have 10 years of history, so it has data on all these stats. FDL 7.7, VIG at 7.5, really a cluster right here. VTV 7.3, DVY 7.3, and then quite a few below 7. And now it's time to add in our last metric, dividend yield. And for this one, we go with the trailing 12-month dividend yield because you do want to see what it's yielding now, like when we assess this video. Historical dividend yields sometimes aren't relevant combined with price appreciation. Because remember, dividend yield's just a vanity metric, except for the day you make a purchasing decision. Yield on cost is all that matters, technically speaking, for something that you already own. And that's that whole compound factor weighing in. But anyway, the trailing 12-month dividend yield, and I should label that more accurately. There you go. Trailing 12-month dividend yield has FDL at number 1 at 4.17. SCHD comes in the 2 spot. And then you can see, we won't read them all off. Let's look at some of our favorites. VYM's always solid. It's a 6 spot. DGRO at the 9, Noble at the 10, and VIG, we expect this. It's always low, 1.82, down at the 12 spot. So after a little fake drum roll here, we have crowned a champion, and that champion is none other than SCHD. And no, this was not rigged, and no, I did not have this when I thought of the criteria, but I'm telling you guys, there is a reason I love SCHD. The short-term woes really are exaggerated when we zoom out and chill. I know everyone has their own opinion, but there's a reason a lot of people love this one. It returns nicely, historically, not recently. It grows very consistently, and it has a very high yield. That is the trifecta. And you can see it wasn't really close. Its average rank was 2.3. FDL Its average rank was 3.3, and then DGRO 4.3, and nothing else was averaging below 6. But SCHD officially swipes the first crown in this series. I'll throw out a little update for those of you that follow the channel. I'm sticking with SCHD because I love its performance over the long haul on the 3 key metrics. I see the struggling price as a buying opportunity. I'm up to 15,000 shares and I don't plan on stopping anytime soon. In my opinion, the price is a short-term blip because the rock-solid methodology hasn't changed. I'll take the sample size of 13 years to see how a passively managed ETF is going to perform over the last 2 years when no changes were made to the underlying logic. But that's just me, and we've talked way too much about this guy. What I really want to hear, and I really do, is what your favorite dividend ETF is down in the comments. I appreciate you for going the distance with me on this one. You really are one of the real ones. And check out one of these 2 videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Peace.